Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Okay, how's it going, everybody? It's been a while, huh? Anyways, taking off some time I know to do a video, and the reason is due to I've been studying a lot. I've been studying a lot on these damn markets. So I kind of want to go through some things today that could help you, because that's what I want to do. I eventually want to help other traders. I didn't just want to go through and be like, oh, this is what this chart did, and this is what this chart did. I want to eventually get to a point to where I can teach you something. Now, don't get me wrong, I'm going to be teaching you things that I was taught as well. And I'll give full credit to, that person. And if I see something that, I think I may have caught on my own, then, maybe I will say that was, my own credit. I don't know. Anyways, what I usually do is I usually just go over, different charts and analyze them and see where we're going for this next week. I want to bring up something that I haven't brought up before, and that is COT reports. I don't know if you know what COT reports are, but COT reports are basically where the central banks are basically forced to tell what kind of position that they're in, if they are long, if they're short, things like that, so we can help you to understand where they're at as far as where they're at compared to where the Forex charts are at. So to let you know, if we're here, I'll just get to it. That way, we don't have to worry about what is what, and what's going on here, anything like that. We can just get right to it. So let me do that. Let me go ahead and switch over to the charts here. Alright, so if you go to barchart.com, that's where you find these, right? You go to barchart.com, go to currencies, right, and then you go to commitment of traders, and then it'll bring up all these different financial trader reports, right? And it'll have all the different ones for the major pairs, usually at least the US pairs. It does have some crosses, not many. It does have the euro and the pound, but other than that, I think that may be about it. And that's mainly because that's the big one, right? So you have this commitment of traders report. So let's say we go to, I'm going to go to the first one. This is the EURUSD, right? So you go to EURUSD chart, and down here you have it all lined out. You have the large speculators, small speculators, and the commercials. So the red is denoted by the commercials. So this is denoted by the larger banks, right? The ones, the Dutch bank, JP Morgan, whatever. This is how they make their money too, by playing in this space, right? So what it shows here is that in EURUSD, ever since about March or so, right around COVID time, when everything started going crazy, and this is a 1 year chart here. So it basically showed that it looks like it was kind of flatlined for the commercials. They may have been a little bit long, but not too much, right? And then all of a sudden, right after COVID, they started shorting, right? They started shorting the market while the market is going up, mind you. So the market is going up, and the commercial banks are shorting the market the entire time. So what that tells me is that for them to actually get back to make a profit, right, it's going to have to get below where it needs to be, or they're just pushing in more shorts than where they were longs. But to me, what this says is now we see it start to turn, right? So ever since September, we have seen this turn basically. You can kind of see the shorts go a little bit lower. So if we look at this box right here, let's look at this box. Let's go from August right to September. So if you look at the COT, which is commitment traders, and you go to the C, which is the commercials, right? You see negative 217,509. I don't know if that's dollar numbers. I don't know if that's orders. I don't know what that means, to be 100% honest, right? But let's just look at that number. All right, we go to that number, and now let's go to where August is, and let's go back to that COT commercial. Oops, come on, bring it back up. Right, yeah. COT LC, and that has a parenthesis C, that's commercials. Now we're at 251, negative 251, 585. So that is a difference of about 40,000 more, right? So about 40,000 more shorts up until the beginning of September. Right now we're toward the end of September, going into August. Now those COCTs, right, they've dropped to about 239,000. So their shorts are dropping, right, which means they're longing more, which is interesting considering the market is shorting. So that means, since they're longing more, that means there must be a long coming soon, right, for them to actually make a return on their investment, right, to actually make money. It's going to have to short more, right, before they can start turning long. So that being said, we're probably going to see the Euro USD continue dropping until we see it cross this path, until we see it cross over to being long again. Because as you can see the large speculators, what they're doing is they're doing what you would see the market would normally do. You know, they're kind of in the middle here, back here, until COVID happens. And until COVID happens, you see them start having more longs. Well, they're having more longs is because that's where they're making their money, in these longs, right? So they're net long more than they are net short, except for the commercial banks. The commercial banks are actually net short. So they're basically opposite. They almost kind of offset each other. Not really they offset each other, but commercial banks are not in this to lose money. They're in this to make money. So let's take that one. Let's also take this one into example. This one is the British pound versus the dollar. Now this one is a little bit more interesting for sure, because it has crossed over quite a bit more within the last year. Commercials were definitely net long way back about a year ago, and as you can see at that point, it started to go long, right? So, and whenever it got to the highest point is when they started going short, right? So at this point they started going short until it gets down to here, and then they started going long again. So that's what's been interesting to me until they get to here, until they get to this point, which is August of this year. Around August, you can see it start switching to net shorts again. So around here, they start shorting the market. Well, definitely now the market is shorter than what it was whenever they started shorting. So you can tell they're ahead of the game, right? They're just not longing it right at that time. They're shorting it because they're expecting it to go shorter. So at this point, they're shorting the market because they're getting people to go up, right, to long the market. That way they can take their money. That way it'll eventually go short, and that way they can make their money off those shorts. Dude, does anybody catch? I hope you guys are catching what I'm saying. Today's episode brought to you by NOS. Not really, but I wish it was. NOS, please sponsor me. Drink enough of these damn things. So let's go to EURUSD, right? And here, let's just go with a weekly chart. Let's auto this, and I'm gonna move this out of the way. And I actually want to clear. Oh, this is a DXY. Sorry, this already is in the weekly chart. So as you can see, since March or February, they have been shorting the market, right? So they have been shorting the market ever since back here in March, basically, is what it was, where we're. So let's go back to that COT chart just to be sure. Here it is, EURUSD, and yeah, it was probably somewhere around here. March 9th, 10th is probably when they started shorting it, right? When they started shorting the market for sure. So that was the height of the pandemic part, right? So they started shorting it right here. No, not right there. Sorry, right here. I'm way ahead. I'm like way. I'm lights behind. So I'm on a weekly chart instead of a daily chart. So right here is where they started shorting it, basically. So they started shorting the market here, and they've been shorting it the whole time, which means for them to actually, for them to actually, I would say, to make money off of all these shorts that they've had, the market is going to have to get below here, right, for them to actually make money. So I would expect within the next couple weeks, months, you could say, EURUSD to be coming down quite some time, right? So let that, you know, be part of, just, you know, kind of focus on that and let that be part of your trading aspect whenever you move forward. Let's go to GBPUSD. All right, so now we have this one. We had it go long. You know, it was longing here as you would expect. Well, I mean, I guess you could say it was longing at the time when you probably wouldn't be going long, and as you were getting less long, you know, you're kind of shorting. I'm not 100% sure how this is reading, but right now it has switched. You know, it went from long to short. Right here, right around this date, which would be August 12th, is when they started shorting it, right? And so ever since about September 9th, they probably started making their money back. So that just kind of tells you how deep their pockets are if they're shorting it. But even then, you know, they started shorting it way back here, back in April of 2020, right? So that's when they looks like they first started switching from their longs, right? So they were longing it way back here. So now imagine they're holding their longs, right, all the way up until here. Yeah, of course they've probably made a ton of money by now, but they're also longing it up here, which is interesting. So longing it, especially here, wouldn't make sense. Well, I would say longing it here would probably make the most sense, but so that just tells me that since they're shorting it here and it's about ready to cross over to longs again, right? I would expect GBPUSD to start going back up. That's what I would expect, considering they shorted it for a short amount of time. It's underneath where they shorted it. It's crossing back over to long, right? Which means I would expect it to cross back over to long as well. So, and I've done this for, you know, every single one. So here's the British pound. Here's the weekly chart. You know, so they started, you know, shorting it back here, right? And then now it's gotten below to where they shorted it, and now they might long it again. Let's check out EURGBP. All right, so EURGBP, this is a 1 year chart. They have been short the entire time. Commercial banks have been short the entire time, so they've been shorting this market the entire time. So they're which makes sense now you think about it, right? So if you put EURGBP, EURUSD, and GBPUSD together, this all makes sense. So you're expecting EURUSD to drop now because of the chart that they have. If we're expecting GBP to go long against the USD, then you would expect your Euro GBP to also go short, right? So they've been shorting this market the entire time. So eventually, and I think we're on this turning point to where we are going to start seeing it start going short now, because here it looks like was the highest peak of their shorts, right, which was right around here this day, September 10th. I don't think they really, whenever COVID happened, I don't think they really knew what was going on, so I don't think that's why there's too much information there. But it looks like this was the peak of their shorts, right around this time, and so since that was the peak of their shorts, you're gonna start seeing this go down. Let's take a look at the numbers here. COT LC with a C, negative 8,308.30. And yep, and you can see it go less as you move along each week. So negative, I see here -7, and they peak at -8, and now it's going back down again. But the whole time they're in the negative. Actually, here's a big peak right here. If we go to this one here, negative 9123, right? And so they're shorting. They're still shorting, you know, this market the entire time. So I would expect, and here's EURGBP here. Let's go back to a weekly chart. And I am actually just going to get rid of everything because I'm going to start drawing new things on charts because of the way I've been learning. I would expect some shorting to be happening on the EURGBP, especially since it is at a very high height, as well as I think historically it is pretty high. But from my understanding, that I think they're eventually going to try to get it all to be about 1-to-1, right? So, which is what I don't understand about the GBPUSD. Here's EURUSD. If you're going to long, you know, the GBP, you're making that much higher than what the dollar value is worth. So maybe they're trying to make the British pound the stronger currency. I don't know what the central banks are doing. Maybe that's what it is. Maybe they're trying to make the GBP the stronger currency. But we could, like I said, we could see it turn around. But then again, like I said, they have been shorting the market. So since they have been shorting the market the entire time, you know, we could, or actually GBP just switched from short, and it looks like they're about to long. So since they're about to long, we could see it short. So those are just things to keep in mind as you're doing your trading. These COT reports do put out a lot of good information. Like I said, as you can see, your USD here. Let's just look at another random one. Let's check out. No, let's do. No, I want to do UCAD. There's UCHF. Here we go. Here's UCAD. So this is another one I found interesting. Let's not do 3 year. Let's do a 1 year. So if we do a 1 year, right, they're shorting the market. They're shorting the market. And as you can see, we just now got to a turning point to where UCAD is now starting to make it shift upwards. Well, it did make it shift upwards, but now they're starting to, you know, they started to long it. But now then they turned around and started shorting it again. So we could see this UCAD come back down again already. You could see a quick comeuppance, right, and that we just saw, because we did see them short at this whole time. Well, I guess the market was shorting, but as they're getting less short and going more long, right, and then now they're starting to long it right around here. Of course, the time it does go long, right, and now they're starting to short it again. So since they're starting to short it again, you could see UCAD come all the way down. Like I said, the one that I just see that is the most interesting is the EURUSD. Why they're shorting it the entire time as it's going long. The other ones kind of make sense. You know, they're shorting it here, but then again, you know, it's just kind of in between. But then they switch, or they're longing it as it's, you know, kind of in between going long and short. But then they switch to go in net shorts, which makes sense because then it starts shorting. But the EURUSD it's so interesting just because it has this net short the entire time, and the only thing that I can see why they would do a net short from beginning of here and all the way up until here is that they're expecting this to go way short before they can start longing it again to even start making their money back. So, all right, now since I talked about enough of the COT reports, let's go ahead and get into price action. So what I have learned recently, definitely go from top-down analysis, knowing that what I would expect again to see from the EURUSD, we may not see such a big of a drop that we did this week, because this week was, whoa, it was crazy. If anybody was playing in the market, you know that there was a lot of money to be made, and I was just now learning, you know, the right times of day, what to look for, things like that towards the end of the week. So I did catch some really good trades at the end of the week, and I'll show them to you what I caught on Thursday and Friday. But the beginning of the week, I was still, you know, apprehensive. I was, you know, paper trading, you know, and doing different things, experimenting, see what I could figure out. And then, you know, it was finally starting to come around, and I'm finally starting to understand, I feel like. So let's go with a deeper look in. So first, let's go to the daily chart. First thing I do, right? You must have a sentiment. You must have some kind of bias that you want to trade with, no matter what. I mean, yeah, you can go. You say, "Oh, well, I am going to be bullish and I am going to be bearish at the same time." You can do that, I guess, but you're going to flip-flop so much that you're not going to focus on what you should be focusing on, and that is one primary objective, one primary goal, and, you know, and that is to see if you're right, right? And, you know, not just to make money, but to... Because if you're right, and then all of a sudden you flip over and be like, oh, well, it could go bearish at this point, and then you stop the trade, and then you try to trade the other way, it could go against you and be, you know, bullish the entire time, and then you just screwed yourself. Where in actuality, if you would have just said, hey, this is going to go bullish, I'm going to stick with it, stay bullish, you know, just stay bullish, right? So that being said, my sentiments for most of EURUSD is going to be bearish. That being said, now that I'm looking at the daily chart, there are some things that I look for to see what could cause these, right? Because if you take a look, and I'm not gonna lie, I've gotten a lot of this information from the inner circle trader. You know, I owe a lot of what I have learned from him, right? So, and what he has said in his channels is what I'm telling you too. So if you haven't listened to his channels, I would suggest you do it, because what I want to do is basically show that what he is teaching is correct, right? So here, you know, have a sentiment, right? So if, you know, basically it's a basic as trending, right? So if you, you know, if a market is trending, you should stay with that sentiment, right? Right, and then so let's say we are on this candle, right? And during this candle day, we had just seen the day before, right? And we had just seen it close, right? But we had seen it close, and then we saw it go lower, right? You would think that, you know, the market sentiment would probably also continue lower. Well, you got to think smart money is going to be down there buying, that way they can go higher, right? So then once it goes higher and does the same thing, you know, we do attack the previous day's high, right? But then we also, come to, you know, a new day, and that new day we do have a little bit of a short, but then we also attack a lot of highs. We attack a lot of highs, And at this point, you know, some people you would think it could turn around, but it does end up going into the next day, and then makes it a little bit more. You know, down here below you have this little wick to where people are buying up for smart money. You know, they attack above, you know, create a new high, it comes back, start a new day, comes up, right? And then on this day they probably attack the new high, but then after they attacked the new high, it came down and closed below. So therefore you're bearish, right? So now you would think you are in a bearish sentiment, but you're still going to, of course, try to come back up, right? That way you can gain more momentum, gain more money as you're going bearish, right? It's going to have a pullback, right? And then here, I honestly would expect the same thing. I would expect it to be bearish, and maybe it did. Maybe it went bearish. And well, that's what it had to have done. It would have went bearish, but then probably turned around and went back the other way. This is probably a news event or something like that turned it and then made it turn around and go the opposite way. Because that's what happened with last Thursday, and I'll show you. So, and then same thing, you know, anytime, you know, you continue seeing a bearish movement, I would expect the next candle to be bearish. Now, how you determine how you're going to play that is going to be based on, I'm going to go to the hourly now. It's basically going to be based on the sessions, right? So each session is going to play their own role, right? It's going to play their own role in how this is going to come together. And from what I've learned is that your London session, right? Your London session is more than likely to form your high or low of the day, right? And then that's also going to create your sentiment, which if it's going to go bearish or bullish. And then you're also going to get a setup with that sentiment in the New York session between 7 and 9 a.m. New York time. Well, for me, that's 6 a.m., 8 a.m. Perfect timing for me because that's right before I go to work. So that's how I got some of these trades this week. Best thing to do, also mark out your highs and your lows for your couple days previously, because they can serve as I guess you could say big, you know, I really don't know. They could serve as trading ideas. There are reasons to trade, because those are going to come in handy eventually. The previous day's highs and lows are going to have something to do with the market a couple of days later. That's for sure. All right, so you know, as you can see, most of the day. Let's see here. So you have. Let me see. Let me try to figure out which day that we're going to be working with here. So, which was interesting. What I found was interesting was we started the week off last week, right? So we started the week off last week, September 20th. Here it is, right? And we just went for the kill shot. So it eventually worked its way up. It attacked last week. It attacked the highs, right, from the previous day. Got those highs, and then that was the high of the week. So that ended up being the high of the entire week. It happened on Sunday night, which is generally very rare. It generally happens, you know, Tuesday night or Monday into Tuesday, something like that. It usually doesn't happen 11 o'clock, you know, directly on midnight or, you know, on New York time, but it did. Right, it came down. And so now in between 6 and 6 and 8, you would have some kind of setup, right? Some kind of setup that, you know, that would have this also kind of sentiment that you would have probably for either a scalp, or if you wanted to hold it, especially if you think we're going to be going down the whole week, you could kind of hold this for the whole week. Now, if we get down to the nit grit of things, let's go back to a 15-minute, And let's go back to last Sunday or last Monday, whatever it is. Right, oh yeah, so here's the high. Here's the high of the week. And then here it is, 2 o'clock in the morning. You also have another high, and this is London Open. So London Opens, 1 o'clock for me, between 1 and 2. London has the high, it drops off. And then here in between, 5 and 8 generally is when you will see some kind of something form for the New York session. What it was is what I found, what I thought it was anyway, was this kind of swing low, right? So this swing low, what it did was it acted as a resistance point, or somewhat of a resistance point for the New York session, right? And so since it acted as a resistance point, what I did is I drew a fib from the point where it stopped. It drew back up, right? Came down, right? Down to here. And now I use different fibs as well. I use a 62%, a 70.5%, and a 79%. And the reason I use those is because I enter on the 62. It usually hits the 70.5. Usually doesn't go any further than 79 though. As you can see, that's exactly what happened. So actually, if I want to, and I usually use the bodies, I usually don't use the wicks because different what's the word I'm looking for, brokers will have different wicks to serve their own purposes, right? Because sometimes one broker will notice that there's 100 people that may have their stop loss sitting right above here, so they could wick up here and take these people's money, as to where the other broker may not have that kind of thing happen. So wicks are not entirely accurate between broker to broker. Usually the bodies and the volumes of each candle are. So this is what happened, right? So in between, it did happen. In between, I woke up around 6 or so. That it had already formed, right? And so I was just waiting now for the pullback to finalize. And it finalized at 7 o'clock in the morning. 7 o'clock in the morning, you enter here, you go short because the sentiment was already going that way. And there you go, boom. And not only does it get to 1 time the amount of your fib, it went a full twice the time, or a full double the amount of your fib. So how many was that? I actually aimed for 2, right? That is a good 57, 58 pip move. If you'd have went for perfection and tried to exit, you could have went all the way down. What in the world? Maybe 1 second here. I have no idea. Oh, of course, there would have to be a bar charts. That would just all of a sudden start playing an ad. So I'm gonna have to close some of these bar charts. We went over them because they're now gonna start playing some ads, and it's gonna end up ruining my video. I'll pull one of them up if I need it. How about that? Sorry for the interruption. I may just cut this out of the video. Anyways, back to EURUSD. Alright, so it would have been a good 65 pip move, right? But also, since it was also, you could have caught it if you would have stayed up. Sometimes people can't stay up. What you can do if you can't stay up, again, aim for previous day's highs, right? If you got sentiment that's gonna that's gonna be like that, aim for previous day's highs. Maybe put a limit 10 pips below that or something like that, and then put a 40 pip stop loss after that, something like that. Generally doesn't go back more than 30 pips of the previous day's high. Generally is what I have found through looking through these. Now we have gotten down here, we've made our low of the day. Your low of the day is usually going to form at the end of the London session, which is going to be in between 10 and 11 o'clock our time, or is central time. So or sorry, that would be 11 and noon central time. It would be, no, would it be? Let me see here. I'm trying to think. I think too much. So 10 and 11 our time. Yeah, 10 11 our time would be 11 noon New York time, right? So and that's because they're generally about 6 hours ahead. So that's what, like 5 hours ahead. So that's like what, 4 or 5 o'clock, something like that. So that's why this is the London time right here. This is the close of the London. Mid-morning for us. Generally you'll see the low of the day form there, and then you'll start to see it retrace, right? And then it retraces to the end of our session, right? And so now the end of our session, after that we have the Asian session, right? So the Asian session starts generally 6 o'clock my time, Central Time, 7 o'clock New York time. So generally somewhere around here. Let me just make a trend line here. So here, right, you have until about 11 o'clock, midnight or so. I would say 11 o'clock. I know it doesn't seem like it's doesn't seem like it's too long. It's about 5 hours, but that's about the most action that you're going to see out of the Asian session generally, right? It's going to be between here and here. And let me make this a little bit brighter so you guys can see it. Maybe make it a little bit thicker so you guys can see it. So there, that is your Asian session there. And then after that, you have your London time. So your London time generally starts, well, I guess technically, it starts at 1 a.m. our time, but goes until about here. Let me pull this up a little bit, and let me change the color. Let's go with a dark green, and then we will do another one starting around 5 a.m. going until the end of the day, right? And then we'll do another color for that one, and let's do a bright yellow. All right, so now we got a peach, a green, and a yellow. So Asian session, not much happening. What was interesting though is that during the London session is that we had this huge drop, right? So we had the huge drop during the London session. Then we had to come back up, which was basically kind of a fake out. Because since I saw it drop, that was going to be my sentiment of the day, right? My sentiment of the day was going to be that it was going to be going down because it went down during London session. This was just the retracement, right? This was the retracement that was happening in between 4, and about 7 o'clock in the morning, 6 o'clock in the morning, because that was where I'm trying to think that's where basically the United States session starts. Now the setup for this one was a little bit different. There wasn't really a fib that I could draw that was going to get me, well, there was, and it came later, right? So what I did, right, so it started happening right around here, so where it started, dropped down really quickly, right? And you got people to chase it. You could chase it, went backwards. People thought, oh no, I need to go backwards. Started chasing it again. Instead, I just left my fib right at 64, right? I entered, right? Let me see. Let me get this other one off the chart so it doesn't confuse people. 64, you enter, right? It gets a little bit of a spike up, and then boom, now you're there. Now you're in for the rest of the day. I aim for twice the amount. Let me see here. Where's twice the amount? Here it is. Twice the amount. Boom. Nailed it. Once you hit twice the amount, again, it's around 10 o'clock, 11 o'clock. That is the end of the British session, right? So you have the high of the day and the low of the day, both usually in the British session, right? There's usually a setup for the sentiment that is going to happen during the New York session, right? You just got to see where the setup is. Right, so, and for us, it was this pullback, right? Once you see this pullback, generally about 20-30 pips. Sometimes it can be more, right? This one was about 40 pip pullback, but that pullback is going to be the setup for the New York session, right? Now, what was interesting, especially what I found, was the Thursday session. Here we can go through Wednesday, I guess. So Wednesday, here we go. We start off. Here is the London session, right? So here we have the Asian session. Asian session lasts until about right around here. So we have kind of a big range for the Asian session, which is really interesting. Especially for the euro dollar. Generally, we don't have this kind of a range, but I think for me, I think the main reasoning was it was setting up for the London session. So here we go. That's basically midnight New York time right there. So we go from the end of the British session, right? We do a little pullback, but then we ended up falling below. And then we go into the next day, right? So next day, our day anyway. We go into the London session, and then here we are. You generally between 2-4 o'clock in the morning, right? You generally see the high of the day, because that's when the London session forms it. So London session, here it is, high of the day formed. Now we're waiting for the New York session to show its face as far as what it's going to what its setup is going to be. Now the high of the day is here. We know it's going. Now that we know that's the high of the day, you know, it did what he calls turtle soup, a fake out. Had everybody thinking it was going to go up. It had been dropping for days. This was the setup for it, right? Had everybody thinking it was going to run up. Instead, it stops. Now what I think kind of stopped it was this like session low, right? So you had this swing low that happened here, and that swing low definitely almost touched, if it was not, you know, so your prior day swing low, right? That was where your session high was for the London session, or your all day high was for the London session. So you had this swing low that came in, right, and played a part, right? So that's why I always say, you know, mark these lows and highs of these sessions, because they will play a part. So it came up, you have your high of the day, it came near that session low, right, and then it all of a sudden decided to go down. Now at this point, now we're waiting to see what the New York session setup is. Again, it's usually some kind of fib retracement, right? Now, what I saw was this last up candle, right? Well, this last up candle that you have before it takes off down into this power, right? This big drop that's happening during the London session, right? As the New York session is about ready to start, as the New York session is starting. Well, I guess or at least this is what I saw. And this is what I saw this day anyway. After I woke up around 6. It didn't form until 6 to 8:30, something like that. And this is what I saw. I saw this big push up, right? And this big push up, and then down afterwards. That's where I started my fib. I didn't start it from way up here, right? I started it from where the last big push was. So I started it from right here, and then I followed it until it started making the retracement. And I was following it the entire way. Didn't retrace far enough, didn't retrace far enough, didn't retrace far enough. And then here, that's when I watched it, and I saw that it hit the 64 or the 62%, I'm sorry, entered there. And then after that, boom, now I have my setup, right? And of course, and then I leave my stop loss, above here, right? Because I don't think it's going to come back above here. It did come back, it did have a little bit of a draw. Well, actually, it didn't have any drawdown at all. It came back up here. If I would have entered here, I would have had a drawdown. But, once your first target is going to be that first 100%, that first part of the fib, right? Your second target is going to be generally 50% of that. I actually have two different targets. I have the 414 and the 618. So I have those two targets. Then I also have another full part of the fib, and then my third target is, I have multiple targets. I have the negative 1.618, and then I also have the negative 2. So I have all of those as targets. And so at each one, especially once I get to the first one, is when I'll take off a portion, right? And then I'll try to see if I can't get to at least the second one, the second full fib, I guess you could say, the turning point, before I can take off another portion. If it doesn't happen, I'll take it off at the negative 0.618, right? It did pull back. I did hold on to some. It came back, and it did finally cross that full one, right? So that full one that I have for the fib. So again, probably made most of the low of the day toward the end of it kind of had a pullback, I guess you could say, toward the end of the British session. But it was kind of an odd day. But either way, the sentiment was definitely on the downward side. But the low of the day actually happened right at the beginning of the, I guess you could, right at the end of the New York session, which is generally doesn't happen, but it did. So we have the New York session going into the Asian session, right? So the Asian session did have a little bit of a pull up, which is interesting. And then going into the London session, we didn't have the high of the day then, but we did have a London session high. Now this was Thursday. So this was a day we had the news that came out for the the U.S. unemployment claims. So the entire time I'm expecting it to, cross over, or at least the dollar be negative for most of this day. That way the Euro USD would go up, and it doesn't. It kind of has this. It did what I expected it to do. It made a high during the London session, and it fell. And then it came down, and then I was looking for the setup, and I'm like, well, maybe it's just going to keep falling. So I think I did set up a fib in between here and here, right? It did come back up. It did hit exactly where I thought it would. Let me get rid of this fib so nobody gets confused. I found this, right, and where it went really far down, right, and then it pushed back up, went back down, pushed back up, and then I don't know, it was kind of a random fib, to be honest. It wasn't anything, but I thought, okay, this is the setup, and then eventually it did take off, and it got all the way down to here, and it got to my 1 point. It got past my 1, so I took a portion off. It got past my 0.414, took another portion off, and then it pulled back, and it got back to the 1 again. And I wasn't too worried about it. And then I sit there, you know, and it kept pulling back and it kept pulling back, and I sit there and I thought about it, and I was like, this could be another setup. I was like, because the news came out at 7:30, right? So the news came out at 7:30, right? And at 7:30, it is still going down. So I'm like, why is it still, you know, selling whenever it should be buying and selling the US dollar? And it doesn't do it for another 15 minutes or so, but even then it buys, and it kind of gives you like the runaround. It doesn't take off like it normally would. So what I did at this point is I eventually had to think on the fly, threw a fib up from the bottom of that, and then pulled it up to I think it was around 8 o'clock or so, whenever we started seeing these form. And then it was around 8:45. I was like, oh, here it is. This is finally the turnaround. So in between 8:30, 8:45, it finally, you know, crossed the fib. I went ahead and entered long, and it was a good thing I did, because then it went the opposite way. So even though it struggled for a little bit, and I knew it was eventually going to go long, it had to wait for the setup to form, because that's what the central banks do. The central banks are waiting for these setups to form, right? They're not going to take off just because commercial traders or retail traders are putting a lot of money into it. They're waiting for their perfect entry, right? And that's exactly where their perfect entry was, right? They knew exactly where it was going to go to. They knew exactly, you know, how far it was going to pull back, and then they could go along from there. All the while confusing retail traders if they're going to buy or if they're going to sell. They just took out a lot of people buying and selling in here while they knew exactly where they were going to go. They made their low, they made their setup, and then they took off after that. So that I found was interesting, and somehow I made the right decision, and I didn't get out. Well, let me pull this fib again. Because I got out at a decent point, but I didn't make my best exit, that's for sure. Oh, it wasn't here, it was here. Oh yeah, never mind. I did aim for the number 2, and it did eventually hit the number 2. So I forgot, this was the one I did make my best exit. So it eventually hit here. That it eventually ended up being the session high, not the high of the day, but it ended up being the session high. And then of course after that it retraced back into the Asian session, and then after that we had more negative sentiment negative sentiment for the Euro USD, positive sentiment for the dollar. Again, London session, as you can see, made the high of the day. It came up near the previous high, and I expected that. So what I did is I ended up putting in a limit before I went to bed. It was about 10 pips before the high. Ended up putting in another 40, I want to say it was a 50 pip limit, just in case it did hit the high, and then go another 30 pips. Generally it doesn't do that. Generally once it hits midnight, what I've learned, especially what ICT Trader has been teaching me, is that usually around New York midnight, right? So around New York midnight this time, the most it is going to retrace is about 30 pips, right? Look at that, it retraced about 21. It retraced 21. So what I did is I looked at the previous high, the previous session high, and I put it down 10 pips. Right, so it was right around here, right, is where I had my entry, right, and then I put about another 30 points since I already knew it was going to go back up. So I had, and then it, you know, was in the red for a minute, and then it took off for the rest of the day. So I woke up, I was in the green, and I was trying to figure out where the New York session one was. So the New York session one was kind of ambiguous. It was really, really ambiguous, to be honest. I woke up around 5:30, and I found it to be, it was weird. It's right here. It actually wasn't, it wasn't the time it was supposed to be. It happened a little bit earlier. There was another one, but I caught the earlier one, right? So I caught this one. So caught it from here to here, and then I ended up entering in at the from this leg. As you can see, if you're in the 15-minute, that's where I usually trade from, because it'll give you whenever it comes back up, right? And then it drops really heavily, right? That's where I placed my fib, and then I put it to the body of these fibs. I didn't place it on the wicks, placed it on the bodies, right? And then all I did was wait for it to retrace. Once it retraced to the 62, I am actually backwards. Let me delete this because it should have went from here to here. There we go. It retraced to the 64 or the 62%, right? And as soon as it hit the 62%, that is where I entered. What is also interesting is that it was also a swing low for the day as well. So that was the swing low for the London session. Happened to be almost at the exact same spot. So these, again, these swing lows, these session lows, these session highs, all come into play whenever you're going to be thinking about trading for the next day. So I ended up entering here. The funny thing is that another one ended up forming during the time that it should have. So in between 6 and 8, another one formed. So again, placed it here, and then placed it here, and well, let me think. Was it there or was it here? It was here. Yeah. So you can see it. No, that wouldn't have made any sense. Actually, it did. It was here. So you can see it pushed down right here, and that's where I placed my fib. I'm gonna say, 'cause I know I entered twice on this day, and it was really weird. So I placed my fib here, entered here as it pushed down, waited to see if it was gonna retrace. It retraced all the way back to the 6.2, right, 62%. So right here is where I entered, right. It did come back, and it almost took me out, because I usually place my entry right, or I place my stop loss right at where I placed the start of my fib, but I placed it just a little bit behind the wick, so it didn't take me out. But then after that point, you know, I got to my take profit 1, which is the end of it. I ended up getting to my -1 as well. At this one, I actually aimed for institutional level of 6,200, right? So that was actually my take profit 2, was 6,200, just because it's a big round number, and that's where the banks usually aim for. But also on my fib, I aimed for the -1 as well. So I had my take profit 1 was here at the, you know, the full end of the fib. Take profit 2 was 6,200, and the take profit 3 that I had was actually the full -1. So those were my 3 exits on that day. Again, 10 o'clock in the morning, you have your low. So London session ending, you have your low of the day. It starts retracing, and it comes back up. It was like clockwork. After I watched a lot of what the Inner Circle Trader had said, all of it became clockwork this week, and the same thing kind of happened for GBP. So I don't want to have to go through day by day. I will go through the last day, because the last day was interesting because I didn't expect it. But let's go through the 15-minute because it did end up forming the high, right? It ended up forming the high of the day, the GBP did. So here I am expecting something to form, right, with a fib, right? I'm expecting, and I'm sitting here, and I pull the fib down from here to here, and it didn't pull all the way back up, and I'm going, what did I miss? What did I miss? Right there is what I missed. I missed this one green up candle, 15-minute up candle. That's what I was missing. And once I realized it, as it was pulling back, you know, because I was thinking, let me say this again. It wasn't as it was pulling back. It was after it made this spike and it started coming back down. I was going, did I miss it? I was like, how did I miss it? What did I miss? And then that's when I noticed the green candle. And then I pulled it back down. I pulled the fib back down, and I was like, I did miss it. Crap. Well, then it eventually pulled back up into the 62%. Eventually entered there, and I eventually ended up getting, well, you know what, it took a while, but it did eventually come down to at least my take profit one. It got to my take profit one for my GBPUSD, and hey, that's especially since GBPUSD pays out a lot more. I am completely fine with making it was about 40 pips or so, something like that. Yeah, got about 40 pips. I was completely fine making 40 pips on GBPUSD. And what I learned over the weekend was that, you know, that's when the 10 o'clock, 11 o'clock in the morning, the end of the London session is usually when the low or the high of the day is formed. If I'd have known that, I would turn around and I would have totally bought and then watched GBPUSD, you know, go the other way. Same thing with the EURUSD. That's going to be part of my strategy coming up this week at the end of the London session, you know, waiting for the sentiment of my trade that I have already been in to be over. As soon as it's over, turn around and go the opposite way. That way I can make money going the opposite way as well. So you have a sentiment of the day to be bearish or bullish, right? Make sure you have that sentiment for your first trade. Wait till that trade is over before you even think about taking another trade. Now, with all this being said, so EURUSD, as on Friday, you know, as that one was setting up, right? And then GBPUSD, as that one set up, the funny thing was they were battling back and forth because I wanted to get into EURGBP. Really wanted to get into EURGBP, and that I was having the same sentiment, right? So I was looking at the COT report, right, and I knew that it was probably going to go short on Friday. Let me go to day, and let's see if it. So on Friday, you can see it did go short, right? So I was right on my sentiment, but the funny thing is it took forever. Right, so as EURUSD and EURGBP were both dropping, GBPUSD was doing absolutely nothing, as you can see. So it was not moving, it wasn't going anywhere, and so I was getting frustrated, and I thought I was like gonna be like, oh God, did I make the wrong move? Is it again? Because what I did is I pulled the fib, you know, as you can see. Or let's go through, you know, the thing. Asian session. Right until about here, New York time, dead water. Then all of a sudden the British session begins. Turtle soup is what he likes to call it, which means, let me get this off the way so people can kind of see the chart a little bit better. So it goes down, right? And of course you probably could have made some money off of the scalp dropping, right? Makes the scalp. Turns around, goes back up, makes the high of the day, right? So it makes that high of the day like it usually does during the actually I made the high of the day almost in that in-between zone. So this is the weird part, because as I'm sitting here waiting for the setup to happen, I noticed that, you know, the low of the day actually came in during the London session, but then, you know, as it was switching from the London to the New York session, you know, it was kind of making a different move, so I couldn't determine if my sentiment was going to be bearish or bullish. And I just said, you know what, it was bearish during, you know, at the very beginning of the British session. I'm gonna go ahead and be bearish as well. So what I did is I took a fib right here. That's where I took the retracement. Right, I went down to here, and then I waited till it got all the way back to the 62, entered at the 62, right, and then it just kind of hung around, and it didn't do anything until, of course, after the lows of the day were both formed from the Euro USD, Euro GBP. They both started retreating back, and then after that point, GBP or Euro GBP then started making its move, right? And then I finally got to my take profit one. It wasn't until late in the day, and then I finally got to my take profit one. So I got all three of the trades right. It's just they all had to move in tandem with each other. So these are the three that I'm going to be focusing on: is Euro USD, Euro GBP, Euro USD, GBP USD, and then Euro GBP, because of how they work with each other, right? And if you can catch the trades on two of them, you can definitely catch the trade on the third, because of how they interact with each other and what you're going to see. So here at this time, you know, between 8 and 9 o'clock, whatnot, these are the times Euro USD and Euro GBP was dropping. You know, the same, you know, Euro GBP wasn't doing anything. Also, another point I wanted to make about this GBPUSD. There was another way that you could have entered without having to pull that fib, right? And that was this right here, right? So you have this breaker, or you could pull here too, right? So you have this right around midnight-ish New York time. You have this weird low, this Asian low, right? And it could have also been this one too. It could have been either or, right? So you have these, and what I'm expecting to see happen below these, right, is stop runs, right? So you're gonna see the banks put their sell stops all below this, right? Not only they're going to put their sell stops below this, they're going to protect them, right? So as Euro GBP or as GBP USD makes its high and it flies through, right, all of those, and it hits all those sell stops, right, and goes down, hits all those sell stops, and, you know, gets to the bottom point, makes its money. As it comes back up, it gets to that point to where probably those sell stops start, you know, from these wicks that you're seeing come off of here. So that was another way that I was thinking about entering as well, because I saw that happen. So those are the two things that went through my mind. They both confluenced together to be, okay, this was the actual entry, right? So this was the entry for the New York session. And, you know, some people could say this is simple, you know, support, support resistance. I see this as the banks putting their sell stops below it and then protecting them once they get back up to here. They're not going to lose that money once they put that sell stop in there. So what they're going to do is they're going to go ahead and just force it to go back the opposite way anyway. And then, of course, at the end of their session, they're going to release it and then, you know, let it go on. But, you know, Euro GBP, as it goes on into the next session, you know, that's when it finally releases and they make the rest of their money going into the Asian session. So Friday was an interesting day between both Euro USD, you know, GBP USD and Euro GBP. You can see how they kind of all work together, and it all had to do with starting off with me looking at the COT reports, right? Going to these commitment to trader reports and then checking out the sentiments, you know, for each one, right? So what I want to do now is I want to pull up, because I know a lot of people are going to be looking at the UCAD, right? Because we are expecting that one to just fly off the handle, right? I'm not mistaken, I have UCAD, no, I have UFranc here, right? That's UJ. Here is UCAD. So here we have UCAD. On the 15-minute chart, I want to go to a 4-hour chart. So as you can see here, because I was in that one, I just want to go ahead and take that off of there. You know, we were probably expecting it to see a swing trade, and we're expecting it to see it continuously swing way up. But if we look at the commitment of traders report, right, we are starting to see the red, right? As they were shorting, we're starting to see it long again, right? So now as we're seeing it start to long again, I think Euro USD is going to go short, right? So we're going to start seeing this go back this way. I wouldn't expect Euro USD, or not Euro USD, sorry, USD CAD, sorry. I personally am going to expect USD CAD to go short this week, or at least go short most of the week. I don't think we're going to see it do its continuation. I think we're going to see USD CAD continue to go down, just because I looked at this commitment of traders report, and we know whenever I look at it, let's go with the last 6 months. You know, we're seeing it short, then all of a sudden we see it change to long, right? So they're shorting it the whole time. It is going short, right? Start switching it to long, and now they're switching it back to short, right? So since they're switching it back to short, I'm going to expect it to start shorting again. So anyways, that is my video for today. That is what I wanted to bring to your attention. That is what I have been focusing all of my attention on, and I wanted to share that with you guys, and I hope you got something out of that. If you did, please do me a huge favor, and what you can do is hit that subscribe button. You can get more videos from me, hit that alerts bell, throw your hands up and do the hokey pokey, but most likely just like the video. If you can just like the video for me, that'd be super awesome, because that shows YouTube that people are watching my videos, they are liking my videos, so, and that lets me know that you got something out of it. So it's the least you can do is at least like my video if you took the time to sit here and watch all of this. Okay, thank you very much for all of your time, and I hope you got something out of this, and I hope this helps you with your trading going into next week. All right, thank you, and remember to always keep your pants on.